Today is another day. Today it's another week, 21st of October. And yeah, we are gonna break down the markets, see what happened last week, what should we expect this week. And as usual, of course, we always start with the top-down analysis. Today we are going to be looking at all the markets I trade. That is London session. We are looking at USDJPY, GBPUSD, gold. I actually trade gold through also New York session. And then for the New York session, we shall be looking at US 30 and US 100. Well, Nasdaq and Dow Jones. Okay, guys, let's begin with the USDJPY. Let's see, top-down analysis. Everybody knows where we begin from. We begin from the weekly, and yep, let's see how it went last week and what should we expect this week. Yeah, from what we see, guys, sorry, let's delete this. We don't need it. Yeah, okay. So, on the general outlook, guys, you can see that the the USDJPY, it's been on an uptrend for some time, not just for some time actually, for since January 2021 till now. Yeah, and you can see my long-time trend lines. I do these purple lines. These are rays actually. I never delete them because market always respects them. And also this inner line. And you can see that in July this year, yeah, the market broke through this line and came down here, but it never fully touched the lower trend line. What does that tell us? It came back up here, and what I was expecting is for it to come fully and retouch this line, come back into this zone as a retest, and then come back down to touch this line fully. From this line, anything after this this purple line, I'm not quite sure whether it will continue to fall, but I would suspect that it will go back up. Yeah. But anyway, that's what I see on the weekly. It's still a bullish market. If you watch closely, the previous candle closed bullish. All the candles before closed bullish. But this week, we can't say. Let's go down to this lower time frame. Maybe it will change. Let's look at the daily. And on the daily, yep, on the daily, same story. We are looking at a mini time frame here. I don't think we need this, but if you see, we dropped very massively. That was a few weeks ago. Now we are trying to rise up here. Actually, the market turned around at this point, and it came back here. Let's see how it ended last week. Okay, so on Friday last week we formed, I could call this a bullish engulfing, sorry, a bearish engulfing. You can see it looks like a bearish engulfing. No, not it looks like, it is a bearish engulfing actually. And as you can see, this market had a lot of momentum moving up to this place. Look at the way it moved from here. We moved up, we got a rest here, we consolidated here a little, moved back up into an impulsive move, and then lost momentum for several days here. Look at how we lost momentum, and you can see during the loss of momentum, we formed a flag. You can see we formed a flag pattern, which I didn't like because this flag pattern, you see, it's looking up. Most of those flag patterns that look up, they are bearish patterns because when market normally breaks below them and continues to go down. So from what we see here, market has already formed a bearish engulfing candle here, breaking through this flag. We may expect market to come back below here, but always be ready for surprises, false breakouts. So that's why you have to be alert and see price action at this point. Let's drop down to the 4-hour time frame and see what we are looking at. Actually, before we drop down to the 4-hour time frame, I wanted to show you why I was looking at this area as a potential reversal or turnaround point. I couldn't just call it a reversal. It's a potential turnaround point, but it seems we are not going to reach it. Market may already turn around to go back down. So if you look at this area, we have a base already here. You guys, I trade supply and demand, but that area matches with our Fibonacci zones. Let me just show it to you guys. This is a one drop like that. Yep, that is 0.62 at a base area, creating a supply zone. Sorry, a supply zone up here. And yep, so we haven't reached it. The market may go back up, creating a fake breakout here, and go back into that zone, touching this trend line and into that zone to turn around. But you have to watch. Price action is key. It's always king. It always wins. Watch out for price action. It may not reach up there. It's close at that zone, so it can just continue down to come back and search for this trend line down here. Okay, in the 4-hour time frame, guys, same story. 4-hour time frame. I don't think we should go back up there and see what's happening there. And actually, if you can see closely, all these what supply zones. But what you should know, guys, not every supply zone is a potential reversal area. Supply zones may just be areas of consolidation when market reaches them. This is one, and we see another one here. So you can see how market reacted to this area. It consolidated for a long time. So let me show you how we drew these lines here. So you can see last week we moved up here, had a little break down here, came back into this area. You can see this rejection, did the same thing, rejected this area, pushed up into a new zone, creating a new high up here. And actually not just a new high, we broke through this previous high, creating a new high here, so confirming an uptrend. But then market lost momentum and went into a wedge. You can see the upper line, the lower line. This is where my line was. I would be very careful with this wedge. Why? Because sometimes you can see how the wedge looks like. This is a breakthrough with a bearish engulfing candle. We came back here to retest it. I would say we should expect another movement upwards. But then let me show you something, guys, why I would be very careful not to just enter a wedge like that after it's been broken through. If you look at this, we may form something like that. You guys, you can see that, right? So there is a possibility if you are to scalp and sell, I would sell maximum to this area. You see, maximum to this area, and see how market reacts to this zone, because you can see these parallel lines. I extended this parallel line down here, created its string, and see. So very possible market will come, push all the way up to this point, and then react from this area, push back up. But the other thing is this may be it may be a true breakthrough. Why? Because if you know the 3 magical touches, you can see once, twice, 3 times. Third touch, something always happens. So third touch, magic happens. Magic can happen in both ways, because if you've studied wedges well, this may be a bearish wedge, but market will always surprise you. It can break through the low, take out, go for a stop loss hunt here, and take out liquidity, sell side liquidity here, before it pushes back up to create a fake out here and continue into the uptrend. You see, so you have to be careful here. Watch out for price action and look for any confirmations before you go in for a sell here, or else this is still an uptrend, guys. Be careful. Okay, let's maximum go to the hourly, because I don't think we shall see something different down there. You see, this is the area I'm interested in. You guys can see we broke through this area, came back to retest it. So you can go for a sell, not right now, but first wait for market to turn around. Go for the 15 minutes, look for a confirmation, turn around and take a sell, stop loss up here, take profit. Let me show you guys. Short. This may happen actually during New York time, something like that. But always wait for confirmation, because guys, I told you, be aware of fake breakouts. You see, so this is a possible trade I see here. Wait for it to come back into this zone. You can see this candle. Why I'm considering it, I can teach you why that is. But I will consider the whole of this candle as my potential area of reversal. And then once it reaches it, touches it, I'm in, get back down here. Very tight stop loss. If it breaks through up here and comes back into this line, just know it has been a fake out. We are going back up. And that shouldn't surprise you. It happens in the market. You're not supposed to win everything. But if you take this trade, we would be looking at like a 1 to 3, even if we end here, you see. That's a potential 1 to 3, guys, trade. Yeah, so patience is key. Okay, so let's move on to the next market. We should be looking at GBPUSD. Sorry, I posted this video late. For those trading GBPUSD, you will see this. This will be quite late for you today, but it's a weekly analysis, so it's still valid throughout the whole week. Okay, guys. Same story for GBPUSD. Do we have any news? Just a minute. Do we have any news for GBPUSD? We have some American news here. When is it coming out? 25th. Today is the 21st. That's like Thursday. So for GBPUSD, we don't have any big surprises in terms of news. Let's just see the price action. Let's see what we should expect. Okay, let's go for the weekly. And on the weekly, oh guys, sorry, my chart looks a little dirty. Yeah. But anyway, you can see the weekly, it's been a very strong uptrend for quite some time now. Let's see, since when? Wow. Yeah, this guy has been moving up for some time. Since 2022. Wow, September 2022. We've been on an uptrend, massive uptrend like that. And guys, on the weekly, if you see a massive uptrend, that doesn't mean you can't sell in this market. You understand? Because look at the previous weeks, 1, 2, 3, 4 weeks, we've been on a downtrend. So you have to have in mind, why we look at the weekly, sometimes some people some begin from the monthly, but why we begin from the higher time frame is to draw higher time frame trend lines, because once you have higher time frame trend lines, market can move in the opposite direction of the higher time frame trend line. So where will it turn around? Always the reference points are those trend lines from the higher time frame. An example is this. On the weekly, the trend line shows we are highly bullish, you see. But in the last 4 weeks, the market has been falling. And what helps you to know where should we expect a turnaround, like to go back into the bullish trend? You see, because this is a retracement. Market moves up, retraces, moves up, retraces, moves up, and massive retracement here. So we expect it to come and turn around here, but not every time. Look at this point. We didn't touch the trend line. Here we touched, here we didn't. And the market took off. Price action is king. All trend lines, indicators, and all that, they are meant just to guide you, but your confirmation point should always be price action. Okay, so on the weekly, last week we closed, we have a doji here. It's non-clear, but it was still bearish. This week has begun, also looks bearish, so I would be bearish on this market for the meantime. But let's go down to the lower time frame and see what we are looking at here. On the lower time frame, the daily, we already have our trend lines, guys. I'm not going to show you how we draw them, but you can see that this market moved up here. This was a very massive uptrend. We retraced back here, and look at the point where we turned around. Guys, previous highs are always very important, because when mass market breaks them and retraces, always look at the previous high level for a reversal. Not for a reversal, but I could say a continuation of the market into the direction of the trend. And that's what exactly happened here. Sometimes we can break them. For example, here, we broke through it, came back here, but never turned around at the same point. Look at where we turned around at the previous low. So the previous highs, previous lows, they are very important. Look at how market reacts from there. If you get any confirmation in the bullish side, you buy. If not, then we are still continuing in a downtrend. Same story here. We came pushed up. We didn't push far away from the previous high, and as I expected, we blew through the previous high, breaking actually this inner trend line to come back here. And even when we come back here, we broke through this low. You see, we broke through this low, and somebody can even call this changing market structure. You see, so we broke through it. Right now, what we see is still bearish, guys. The buyers could be bearish, but price action is king. Let's move down to the lower time frame. We don't have any. Let me see. What news is this? Yeah, this is the same news. 25th durable goods orders. I don't know about the relevance of that news. I don't think it will be big, but anyway, anything can happen. So in the meantime, we are only trading price action. No news, no what. Okay, 4 hours. You see, on the 4 hours, yeah, massive downtrend from up there. We came back here and then consolidated here. I can't call this a consolidation. It's a loss of momentum of the downtrend, and it's forming a bullish wedge. Let me just draw it a minute. Yep. It doesn't have to be perfect, guys, but I don't know if what I'm seeing, you're seeing the same thing. Guys, do you see that? And this wedge is happening where? It's happening close to our weekly time trend line. So within this wedge, we are trading the wedge. You understand? We are still on a bearish move. So not here, before we break this wedge, come back to retest it and go back up. We can't be bullish. So right now we are still bearish. What do we expect the market to do? We expect something like this, but with how many touches have we had? Once, twice, third touch almost. So anything can happen here, but in the meantime, guys, this is still bearish. It's still bearish. Yep, stop loss up here. And your take profits as a 1 to 2. I think 1 to 2 would be good. Guys, why would I consider 1 to 2 not 1 to 3? Look at the volatility in this market. Like, just look at the range in which it moves. How many days did it spend here? It made one massive move and then continued like that. Don't expect 1 to 5, 1 to 8 in a market which has low volatility. If you caught this move up here, all the way down here, maybe you would have caught a 1 to 5 or 1 to 4. But if look at the volatility happening in the market, it's ranging within a wedge. It's still falling, but it's moving within a wedge. The volatility is not so high, so guys, have the right expectations, man. Don't look for 1 to 20. I know ICT traders sometimes do that, but how many times will you get that? You see. Meanwhile, somebody who has looked for a smaller risk to reward ratio will have a lot of trades. You see. And with the right risk management, you can have a lot of profits from those trades. So this is what I see for now, but anything can surprise you, because if you look at this area, let's go down to the lower time frame and see what we see. What do we expect here on the 4 hours? Sorry, on the 1 hour. Yeah, something similar here. Actually, let me see. Can we reduce this all the way here? Guys, as I told you, if we break this guy, like this trend line, and move up here, we expect a retest. Always wait for the retest to come back here, and then we shall have our buys, guys. But why not target these lows? What will be the risk to reward ratio? 1 to 4. That's not worth it. So the best thing is for a 1 to 2. Yeah, there is a very high chance that the market will come and hit it. I'll give you an update on this trade, but that's what I see for now. We are still bearish here. Yep, that is GBPUSD for you guys. Let's look at gold. XAUUSD. Sorry. Yeah. Guys, let me know in the comments who likes trading gold. I know a lot of guys like trading gold. Why? Gold has a lot of what do we call it? Volatility. It moves, and when it moves, the entire world moves. That's what I can say. Wow, what a clean price action we are looking at here. Anyway, let's go back to the weekly. Same story, but there is nothing much to see on the weekly. Same old story with gold. Gold has been pumping up for a long time and doesn't look to be coming down anytime soon. Guys, you can see up, consolidated for a few weeks, up, consolidated for a few weeks, continued up. This one has been a massive upward push, so we may expect soon, the next, maybe this week or the next few weeks, for the market to settle a little here. But anyway, let's look at the daily. Gold, we are bullish, we are bullish. There is no other story to tell there. Wow, my graph really looks very ugly, guys. Agree with me. But anyway, let me explain to you. You can see these lines I drew here, how important they are. Look at this one too. It's not useless. This is our weekly trend line, and this is our daily trend line. And you can see how it respected it. The next time it touched it once, twice. The third time it touched it, the market took off like crazy. You see, and if wow, if you caught this market from here up to here, you'll be dancing calypso, man. Okay, so we last week actually we caught two trades from here. Last week we caught a trade from here up to here, and then once market broke through here, we caught another trade from here up to here. Check my channel, you will see those trades in the shorts. I posted those trades last week. But anyway, you can see gold is massively bullish. I wouldn't sell if I'm you, unless you are scalping on the 1 to 5 minute time frame. But on the bigger time frame, you want to hold your trade longer. You have to wait for an entry for the bullish for a bullish trade. Don't hold your sell trades for long. If you get a sell, make sure it's a very fast scalp and you're out. For example, in this wage, somebody could have had a good sell up to this level and then out. You see, all these points somebody could sell, but that is for experienced traders. Going against the trend is not advisable, it's not wise, even for experienced traders, unless you are a counter trend trader. There are counter trend traders who know how to get in and out very fast without the market realizing. So anyway, these levels are indicated here. There is a reason why I placed them there, that is supply and demand levels. But if you can see, last week we came into this wedge. It was a bullish wedge. When you see a wedge looking down, that is a bullish wedge. But nobody owns the market. I always leave that disclaimer because you always have to follow price action. Even after breaking through this, it came back into here. But if we came back here, pushed up here, and then came all the way down here, we are looking at a reversal. You see, we are looking at a reversal. That means it has been a failed breakout and creating a reversal down here. But sometimes market can create a failed breakout here, come back, play around here before touching this line and push back up again. That is still stop loss hands. The market is trying to induce traders like you and me, small traders, to free up those positions for the big boys to come take them and then take the market back up. But anyway, guys, that is 4 hours. This market is still bullish. There is nothing else to say here. Look out for buys. And since the market has been moving for a long time, let's see the last time it made such a move. How long did it move? From here to here. Yes, guys, you can compare. Look at this. From here to here, you can see how far it is. So from here up to here, maybe we can move all the way maximum up to here and then have a consolidation there. You can see the movements. Biggest move previous happened some time ago, you see. So gold, that's what it does. Right now it has been moving up for some time, so expect to continue up maybe around here and then turn around, come back to look for this trend line first. If it breaks through it, then we are looking for this trend line. If it continues to break through it, then we are looking for this trend line on the weekly. So simple, very simple as that. Bullish, my prediction on gold, it's bullish. Look for the buys, and you can check out my Telegram channel, guys. Don't forget to check the description of my channel. I have on my links the link to our support, the link to our Telegram channel where we post all the free signals, materials you need to learn how to trade, and news, any kind of news about mentorship, because I do mentorship. Very soon I'll be starting a new marathon with a few students. I want to take on 10 students, guys. So check out my Telegram channel for news about the mentorship, for free signals, sniper entry signals, and make money off them. And also, we actually do account management. If you have troubles trading, if you have troubles making money in the market, don't feel shy. Reach out to me, and we can help you with account management. We don't need your logins to your money. All we need is MT5. And once we have the MT5, we go down, do the magic, and then share the profits with you later at the end of the day. But anyway, guys, let's move on to the next market. We are looking at US 30. US 30 and US 100. US 30, I will be very fast here because I think we're out of time.
So guys, as we continue, let's continue to break down US 30. And for US 30, actually, we've taken out a lot of time. So I don't want to go back to the weekly. Guys, let's start from the hourly. As you can see, I explained last week why market moves like this, especially this zone. Go and check out my previous video on US 30, why it stayed here for a long time, started to play around here, forming a lot of wicks around this area, taking out everybody before it took off, broke through here, created a base, continued up here, and the reason why it came and settled around this area, not this area. Check out the previous video, it will explain everything. But this week, guys, we are bullish. There is nothing else we can see here. But for scalpers, people who are very fast, they can catch a few trades here and there on the sell. But if you're a smart trader and you don't want to risk, it's best to look out for buys. So last week we settled around this area. This was our area of interest. We rejected it the first time. Second time we didn't take off. Third time we took out a lot of people here. You can see these wicks. They are not equal because they know people leave their stop losses right below those wicks, especially smart money concept guys, ICT guys. They leave their money like their stop losses here. Took out everybody here. Came the last time to take them out before the market took off. Came, rested around here, pushed up, created a new high, and then look at what happened. We actually have a gap here. I didn't even notice that. There is a gap here, and it looks like an exhaustion gap. So guys, be careful. Be careful. That gap, it's coming back here. We may either reject it and continue up, or break through it, come close it, and then come back for this area. So this is my area of interest, guys, especially this low here and this previous area here. So that's why you see this trade I placed here. If market comes here, gives me good good price action, I'll buy it. That may happen today or tomorrow, guys. Not every day is a trading day. So this is the area I'm expecting market to come back, reject this area, push back up. Don't forget, guys, to use good stop risk to reward, a good stop loss, and don't just look at risk to reward, because if you're looking for 1 to 3, somebody may place a very tight stop loss around this area, you see, and you may get a 1 to 7. You see this, like a 1 to 7. But why? The market is here for a long time, man. Place a good stop loss, 1 to 2, 1 to 3, you're done. You understand? And this trade may take you a day or two to reach your take profit, but for what it's worth, your stop loss will get hit less and less compared to people who have very tight stop losses. So guys, that is US 30 for you. Let's go down to US 100. Let me actually today this week We don't have a lot of big news. Let's look at US 100. What do we have here? US 100. I like this. I like the price action. It's doing what exactly I want. So where, as I explained to you guys, indices, US 30, US 100, always first look out for your area of interest. Why do I say so? For the previous market, look at how we pushed. And what was our area of interest? The whole of this area was our area of interest, buy area. You see, it pushed up, but look at how far it took, how long it took for it to come back and take out these zones. This is liquidity. It comes, sweeps out this liquidity. It would have swept it even further, taking out these areas here before it even pushed up. But thank God, we actually caught this trade from around here, pushed up to that zone, and then here it came, broke through this area, previous high here, settled around this area. Look at how many times it tested this area and then pushed back up. So after testing this area, look at these wicks left here. You know what market wants to do to those wicks? It wants to take them out. Came, took them out, and settled around the previous base here. And that's what we are still considering as our area of interest right now. So the market may come here. I would look at this zone. I would look at this zone. Those are the two zones I'm looking at. These zones for potential reversal, and this zone too for a potential reversal before it pushes back up. And let me see. I think I have a trend line here I drew. It's been okay, yeah. There's also a trend line here, which from the daily actually, which may come to hit. So yeah, we may play around this area for some time till here. It's very possible. The last time it did that, you can see. Where are we? Yeah, it does that sometimes. Look at how long we stayed around this area. So don't be surprised if we continue to play around these two zones here like this. Or let me see, how many touches have we had? We have had one touch, sorry, 1, 2, 3 touches. So the fourth touch may either break through, come here, or go back up. Price action, guys, is key. Always look for rejection candlesticks, bullish engulfing candles. We shall be looking up for dojis down here. Look at this one. You see hanging man and hammers down here before we push up. So guys, look for price action around this area. Be patient, wait for this market to come here, or if it pushes up, rejects that area, continues up, then you've missed that trade. Wait for the next trade. Okay, so guys, that is my prediction for this week. And as I always say, guys, don't forget to check out my channel description. Just open my channel, go into the description, look for my page. You will see my my Telegram page there. You can join our Telegram channel, get free signals, check out my Telegram account, and shoot me a message. If you want mentorship, we are beginning very soon our mentorship, $150 every month, and I'll teach you everything for the next 6 months. Guys, I am not considering taking on anybody for a month or two, because I've been through education. I've studied for 6 years medicine, and I've taught myself trading, and it's taken me almost how long? It took me almost 2 years to learn, and right now we have almost 5 years down the road counting. So if you think you're going to learn trading in 1 month or 2 months, forget. Don't even waste my time. Don't waste your money. I'm only taking on students who are serious. If you want to be serious, turn trading into a profession, not just where you can gamble and make a few bucks and take off. No. 6 months, you're not ready to commit 6 months. I'm sorry. The lessons will be, I'm planning 2 lessons every week, one within the week, one over the weekend, so we can agree with you guys what time is good for you. And then we take on one topic 2 weeks, another topic 2 weeks, another topic the next 2 weeks, and by the end the structure is we have a lecture, we have a lesson to break down, and then practice. All topics are like that, and then trade with you guys, and then break down your mistakes. Look at your trading journal, look at your trades. What mistakes did you make in those trades? How can we make them better? And how can we improve on those mistakes? The other thing is psychology. We shall deal a lot with psychology, and also advanced concepts. We shall be looking at supply and demand. We shall be looking at fake outs. We shall also be looking at smart money concepts, and let me see, and also trade management and risk management. Those are two different things. You should know the difference, and it's only that difference that makes you successful. And what else? And then, of course, the first part of the course is just price action. We begin, of course, with fundamental analysis. We begin with definitions of candles, what each candle means, what information does each candle relay. When you see it, what should you expect? That is price action, and I dedicated 2 weeks on price action. So, guys, if you're not ready to dedicate that amount of time, don't waste my time, don't waste your time. Trading may not be for you, but anyway, guys, if you're serious and trading is, you want to take trading as a serious profession, invest the right amount of time, because you go to school for how long since you were born, and how much are you earning today, and you're not ready to invest 6 months at least, and then at least 6 more months of practice. So guys, be realistic. Anyway, I'll be waiting for you there. Shoot me a message, guys. Don't forget to subscribe, leave a like, and like our page, and also like this YouTube video, because the algorithm likes that. So guys, I'll be waiting for you. Shoot me a message, and yeah, peace.